Alright, today I'm going to be going over power of 3, and not the normal power of 3 where people say AMD. Is going to be true power of 3 with key levels from the day. So today was very easily seen for power of 3. Okay, alright, so your power of 3 can be easily seen during consolidation. Now, sometimes you might see a consolidation like this, and you're gonna think, okay, what AMD is accumulation, manipulation, and then distribution. And this is what people call AMD, or they call their V-shape reversal, or whatever. That is a pattern, but that is not, like, there's more to it. And as ICT traders, we don't trade patterns. Sometimes you'll see that happen, but it's because this reversal area is hitting something specifically, and you have to have the narrative of why there's a generation, they're generating sell side for then it to be purged and then reverse. So it's not always the correct AMD, but you'll see your AMD being with a power of 3. So there's a few levels that you can use, key levels. It's going to be the daily open, your 6 p.m. You're going to have your range settlement, which is 4:14 p.m. It's a closing basis for regular trading hours. Then you have 8:30 a.m., which is the pre-market open for New York. You have your 9:30 a.m., which is your New York open. And then those are just the simple ones. I mean, am I really missing anything else? Oh, then you have your midnight. Almost forgot the most important one. All right, so then you have your midnight. So you have 5 key levels. You also have your, I mean, depending what session you're trading, you want to use your London open and your Asia open, but I don't really push those out throughout the day. The only ones that I really push out throughout the day are the ones above these, all of these. So how do you trade these? How do you use them? What do I do when I put them on my chart? So it's very simple. You're gonna push them out on your chart, and you're gonna see where that opening price is. And how we act towards that opening price will let you know what the manipulation is for the day. So to be able to catch the entire daily range, you want to be able to understand how power of 3 works. So I'm gonna go a little bit into examples for today. Cool. So as you see, actually let me go to the time frame. As you see, market opens right here, starts trading higher, takes out meaningful buy side, and then it rejects towards range settlement. So it taps range settlement, then has a small reaction, and then it goes under it. Now, a very simple way to look at this is when we're under key levels, you're looking to buy, and when we're above key levels, we're looking to sell. Obviously, we're above a lot of key levels today, but you gotta understand the narrative behind why we're gonna do something. I called out yesterday that I wanted to see today leave a fair value gap on the lower end. And as today trades, we left that lower for value gap. Since we just opened at 9 p.m., we just pushed, what, 500 points? Oh, 900 points. So again, going into it, we're in Asia. We're gonna take a look of where we are at the opening price of Asia. So it's the opening price. Now we're below 1. Let me label this. We're below 1, we're below 6 p.m., and we're below range settlement. So we're below 1, 2, 3 key levels for us to look higher. Now, you don't need to be below all the key levels for you to have a high probability trading setup. You really only need one. But obviously, for a better analysis, I try to look for two. So very simply, you have, what do you have here, like an order block? You have your order block, taps into it, under key levels, and then it reverses. Now, a lot of people are going to say, there's accumulation, there's the manipulation, and this is the reversal, so AMD, like distribution. It's a pattern, but it's not always why. Like, why is it going to do it? You always want to understand why, not just, oh, I see a pattern, I'm going to get in it. You'll probably get a good win rate, like maybe 60 or 70%, but you don't understand what you're doing, and you're not cutting out your losers how you're supposed to. So from that, we take our buy side, sell side. This is a balanced price range. Now I want to see the 50% and the upper quadrant be traded into. Again, what time is it? This is 9:55. We drop around 11 a.m. or 11 p.m. We hit the consequent encroachment after we have generated sell side right here, and we're below 8 p.m. key level. Also, you can sometimes use your previous day high and previous day low as your key levels, but that is something that's a little bit more advanced, but it's something to keep an eye out for. I wouldn't say not use it, but I will say to keep an eye out for it and see how it reacts specifically of those areas. As you see, first interaction was right here, second interaction, well, right here. You see how it's leaving from here. So just do your own research on that. I'm not going to be teaching that one today, but your key levels. So this is a model in itself. Buy side and sell side were taken out. The consequent encroachment is going to be, this consequent encroachment on the range is going to be important and how we react off of it. So now that we hit the consequent encroachment of the range, what do we create there? We create all this. Now what do? We create all of this. Now if you didn't get in here, now you understand that this is a order block. Once we trade through this and close above it, we have an order block. We come back into it, consequent encroachment, the bodies are being respected, and the wicks are doing the damage. This is your second entry. So if you missed that, that would have been your entry. And then from there, it goes all the way back, and it comes into this rejection block. Literally taps it to the tick and then rejects off of there. And where is it below? The 8 p.m. So you don't always need to be under 4 power of 3s. Only one is enough. This could have been a trade if you missed that. This could have been a trade if you missed that. This could have been a trade. It's all under the 8 p.m. opening price. So if your bias is to go higher, if your model requires speed and velocity, if you have the narrative behind, everything is pieced together, you could have put a trade right here with literally 0 drawdown, and you could have held it. This could have been your first partial, and then you could have just held it, and then boom, you would have caught like 600 points. Well, more. You would have caught almost 800 points. So that's for the Asia. Now we'll read out London. Your London opening price is going to be 3 a.m. I don't trade these sessions that often. Most ones that I do is Asia, but London is also a really good session to trade. Anyways, your London opening price, boom, 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 is creating just higher pricing, like trend line type of movement. So you have your equal lows. That's your form of liquidity. This is your sell side. And we come in, we hit an order block, we hit a wick, whatever you want to see it, maybe in the high time frame. We hit this order block that was reacting off of another order block, propulsion block. So now you have the idea that it's want to go higher. You took out liquidity it's under power 3, boom. That's all you need. That's your setup. And then it starts ripping. And it starts ripping into this order block. Hits the upper quadrant and then rips higher, higher, higher. So that's for your London. And now finally, for the best part, is New York. So in the high time frame for New York, as you see, there was, so your New York, you have your 15-minute fair value gap that is barely traded into it, just like a turtle soup, trades into it and then closes right out of it and then creates an order block. So two things that are very important here. IOFED is signaling that there is going to be a bullish price run. Well, not a bullish, but it's going to be a price run that's going to be very heavy and very fast. Then the reaction out of the IOFED is it opens and it closes above the initial reaction to the IOFED. This is now a higher probability order block because of the reaction here. So we want to see how we're going to react with this order block. Now, even better, you have your power 3. You have 830. So this order block now is underneath a power of 3, with this indicating that it's going to go higher. So simply, you could just list out your order block, and the higher probability order blocks won't hit consequent encroachment. They will only need to trade into the upper quadrant, especially if you pair it together. Is there an opening closing price is 202? Am I blind or yeah, there is. Okay. Especially if you pair it with a fair value gap. So this is IOFED, goes higher, closes above, creating this as a order block. Now this is a higher probability order block, and it has a fair value gap on the upper quadrant. So this is another model that is higher probability. And as we opened, we're going to be creating another power 3. So you're going to be under 2 power 3s, and you can catch the low of the morning, the low of the opening, with literally low risk, because you're putting it at the 50% and you're putting your stop loss at the 50%, or the consequent encroachment. And you're going to trust that, and it's going to keep spooling higher. Now this becomes your breakaway. And then boom, 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 the rest is history. So very important to note the reaction of the IOFED. This is going to be higher probability again, because it's a fair value gap on the upper quadrant. We put your stop loss at the 50%. You're risking 3.5 or 4 points to make 500 points. So yeah. And all of that could have been understood of the daily and how we're reacting off the daily. I call this fair value gap. Down here was a breakaway gap. We have all these remaining highs. Now this is Tuesday, and we pumped up very aggressively today, almost 1,000 points. So tomorrow is going to be interesting on how we react, because most likely there's going to be another gap made, showing displacement. My next target is very obvious, equal highs, buy side. But these are the type of conditions where you want to take partials early and then let it run. Let 2 or 3 contracts run, 1 contract if you're not, like, you don't want to hold for too long with too much money. These are the type of conditions where the market is really going to pay you off if you're really patient, and it's going to pay off big. So this is my second, or my idea for tomorrow. We have to get towards these equal highs, and if we don't get to these equal highs, it's going to be an interesting rest of the week. But this is my bias. From there, it's going to be tricky, because I'm only looking to go higher. Regardless, I called this out yesterday. Fair value gap right here. Boom, done. Breakaway gap below. And then the IOFED.